What if Ripple's next chapter is not about partnerships, but about becoming the bank everyone else connects to? Ripple has always been about more than payments. In 2025, that truth became impossible to miss. The company that once connected banks now aims to be a bank. This is the story of Ripple's bank charter play, how years of acquisitions, licenses, and strategy have positioned it for federal recognition and potential access to the U.S. financial core. When most people think of Ripple, they picture blockchain, XRP, and global payments. But inside the company, something much larger has been unfolding. Ripple is building a regulated financial structure piece by piece, the kind that can operate directly with banks, regulators, and eventually the Federal Reserve itself. That structure begins with a special type of license, a U.S. National Trust Bank Charter. It is supervised by the Office of the Comptroller of the Currency, which is part of the U.S. Treasury Department and oversees nationally chartered banks. If approved, Ripple would become a federally regulated trust institution, one step below a commercial bank, but with enormous reach. Let's rewind briefly. From 2019 to 2021, Ripple acquired the engineering foundations, Algorithm, Logos, and Tranglo. In 2023, it pivoted into custody with Mitaco, learning the rules of safekeeping under regulation. In 2024, it secured Standard Custody, a New York regulated trust company. By early 2025, Ripple Prime, formerly Hidden Road, gave Ripple an institutional brokerage engine. Then came Treasury, a billion-dollar acquisition connecting Ripple to 13,000 banks and trillions in corporate payments. Those were not random moves. Each one built a regulated layer: custody, liquidity, treasury, and compliance. Now the company is aiming for the charter that ties all those layers together under federal oversight. So what exactly is a National Trust Bank Charter? It is not a retail license. Ripple is not opening checking accounts or ATMs. This charter applies to institutions that provide custody, settlement, and fiduciary services, things Ripple already does. The difference is that federal supervision allows a company to operate nationwide under one consistent set of rules. It replaces 50 state licenses with a single framework. It also allows direct relationships with the U.S. financial system, including the potential to apply for a Federal Reserve master account. That is where the story gets interesting. A master account is the digital doorway into the Federal Reserve's payment network. It is what lets banks settle transactions in central bank money, the final form of the dollar. Right now, every payment provider has to route through partner banks that already have one. Ripple's goal is to hold its own account, cutting out that dependency. With it, Ripple could settle payments, RLUSD transfers, and liquidity operations directly with the Fed in real time. It is the difference between renting access and owning the key. For years, Ripple has been renting bridges from the banking system to move liquidity. Getting a charter means owning the bridge. A master account means connecting that bridge straight into the Fed's highway. That is why the charter is not just symbolic, it is structural. It would turn Ripple into a regulated participant in the financial system rather than an external partner to it. Now, what makes Ripple a credible applicant? The OCC looks at 5 main areas: capital, management, business plan, compliance, and community fit. Ripple checks every box. Capital, billions in cash reserves and XRP holdings. Management, veterans from BNY Mellon, CLS, and global banking compliance. Business plan, clearly defined, custody, RLUSD issuance, and institutional settlement. Compliance, proven through a decade of FinCEN oversight and global licensing. Community fit, active participation in regulatory discussions and financial inclusion programs. The OCC moves cautiously with digital asset firms, but Ripple's record is unusually strong. Let's talk about what approval would actually enable. First, Ripple could custody and move assets under national trust rules. That means it can legally safeguard digital assets and stablecoins for institutions in all 50 states. Second, it could issue RLUSD, Ripple's dollar-backed stablecoin, directly under federal supervision. Those tokens would represent dollars held with top custodians like BNY Mellon and could circulate within regulated networks and on the XRP ledger. Third, a charter would allow Ripple to streamline settlement between its divisions, Prime, Treasury, and payments, without relying on third-party banks. That is where efficiency and control converge. Picture a corporate treasurer using Ripple's systems. With Treasury, they can already see balances across multiple banks. With Ripple Prime, they can source liquidity instantly. With RLUSD, they can move digital dollars under regulatory protection, add the bank charter, and Ripple can settle those flows directly with the Fed instead of through intermediaries. That is end-to-end control, visibility, liquidity, and settlement all in one regulated loop. Now zoom out. Beneath all of this, the rails, the charter, the compliance, sits the same open ledger that started it all. The XRP ledger, or XRPL, remains the underlying technology connecting everything together. It is decentralized, public, and already supports features like tokenized deposits and automated market makers. If Ripple issues RLUSD under a bank charter, those tokens could live on XRPL as fully regulated, on ledger representations of US dollars. Treasury departments could move them between accounts instantly. Ripple Prime could use XRPL's built-in liquidity pools to manage FX and cross-asset settlement. And custodians could use the ledger for transparent audit trails. In other words, XRPL becomes the plumbing, Ripple becomes the bank that uses it. This is not about replacing banks, it is about becoming part of the system that already runs them. A charter positions Ripple to bridge traditional finance and blockchain under shared oversight. It brings regulatory clarity, credibility, and scale. If approved, Ripple would stand as one of the first blockchain-based institutions to operate under direct U.S. federal supervision. That changes how other fintechs and stablecoin issuers will have to structure themselves moving forward. The road ahead still involves patience. The OCC can extend review periods, the Fed takes its time with master account requests. But the direction is set. Every acquisition, every license, every partnership points toward this goal. For Ripple, this is the long game, not a marketing move, but a transformation into a digital era bank built on regulatory compliance and real-time infrastructure. To summarize, Ripple is combining its trust assets, liquidity systems, and compliance structure into a single regulated framework. The National Trust Bank Charter is the key that ties it all together. And the potential Fed master account would connect that structure directly to the heart of the U.S. monetary system. That is not speculation. That is Ripple's bank charter play, and this is just the beginning. This video marks the start of the Ripple Corporate and Licensing series, where we will explore Ripple's global structure, its divisions, and the licenses that make its network work. Watch for upcoming episodes as we unpack how Ripple's legal, financial, and technical systems fit together across the world. This channel is for educational and entertainment purposes only and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.